a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about water ETFs. And we all have heard about severe drought in California, rationing in South Africa, deadly protests in Iran, and clashes among African countries over water. So water is basically essential to life, but we usually take it for granted. But it is a precious commodity with a limited supply, and population growth, pollution, climate change, these are the factors that are leading to a shortage of clean and accessible fresh water. And in fact, water scarcity is already a big problem for countries that are witnessing high population growth. And according to United Nations Environment Program, almost half of the global population will be living in areas of high water stress by 2030. Now, another reason to look at water investment is that President Biden's infrastructure bill, the plan that includes $55 billion in water infrastructure investments and other water system related investments as well. So investing in water can be a good long-term bet for investors who are concerned about its scarcity in the coming years. And it is also a good investment for investors who are focused on environment-related, ESG-related investments. And we have seen this trend towards sustainability related investments, the rising trend, the rising popularity of sustainability related investments, because now investors want to invest according to their beliefs. So let's take a look at 3 ETFs that help you gain a diversified exposure to water related companies. So the first one I'm highlighting is by Invesco. It is the most popular water ETF, Invesco Water Resources ETF, ticker symbol PHO. It invests in companies that create products to conserve and purify water. Quite popular with 1.7 billion in assets under management and has an expense ratio of 60 basis points. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com, read our research report, articles, and then go to the Invesco web page using the link on our quote page, and you can see what it actually holds. Now, these are mainly mid-cap and small-cap companies. You will see 41% in mid-cap blend and about 26% in small-cap. So that is why a diversified exposure through an ETF makes more sense to reduce volatility. Now you will see that it is a bit top heavy. Waters Corporation, Danaher, American Water Works, and Roper Technologies. These are the top holdings, Ecolab, and a lot of exposure in these top companies. Now, the second one which I'm highlighting is by First Trust. It is the First Trust Water ETF, ticker symbol FIW. It holds companies that are in the potable water and wastewater industry. It follows a modified equal weighting scheme, equal weighted within tiers, slightly cheaper with an expense ratio of 54 basis points. And this is also quite popular with 1.1 billion in assets. And again, to learn more, you can go to the quote page, and from there, the external home page, First Trust web page for this company, and you will see what it holds. Now, because of this equal weighting within tiers, you will see that it doesn't have the kind of top heavy exposure that PHO had. But you will see similar companies, Danaher, Roper Technologies, IDEX Labs, American Water Works, which are in the top holdings in the other ETF too. Now, since water scarcity is a global problem, if you want to look at a global ETF, then this is worth a look. It is the Invesco S&P Global Water Index ETF, ticker symbol CGW. It holds companies which are in the water-related utilities, infrastructure, equipment, instruments, and materials. It follows a market cap weighting scheme, 57 basis points expense ratio, and about 1 billion in assets under management. Now you will see what it holds. As I mentioned, this has global exposure, 53% in the US, and rest is international, mostly developed countries. Now, because of market cap weighting scheme, those companies like American Water Works, Xylem, these are still the top holdings in the ETF. Now, on the last slide, I have the comparative performance versus the S&P 500 index. You will see that the three ETFs that we looked at today, they are up between 41 and 45% over the past year, whereas the S&P 500 index is up about 34% during this period. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything. And I'll see you next week.